welcome to this midweek macro video, Wednesday, the 1st of October, 2025. And at the time of recording, we have a lot to go through in this video. At the time of recording, the US government is fully shut down to the best of my knowledge. And we're going to look at why that is, that combined with gold is actually a potential recipe for success. We're also going to have a look at Polymarket mid-market of the week. A shout out to a new sponsor for the channel as well. And in the post that comes with this video, I've linked back to last week's video where I looked at gold, silver, and the PGMs, why they're shining and why they've got a lot of room to run. I'm going to link to that post and video because there's many fundamentals there in that post for you. We're also going to have a look at where the markets are at the time of recording this video as well. But first of all, we'll start with Polymarket's mid-market of the week. And talking of government shutdowns, at the moment, at the time of recording, they have got a market on there, which is when will the government shutdown end? There's a 1% chance of it happening today or tomorrow. But interestingly, if you go to the 15th of October or later, so that's 2 weeks' time, there's a 38% chance that people think that it will get to that stage. And the reason I put this chart in and I give you those numbers is because I think that's quite likely. And the reason for that is if we look at the last time there was a US government shutdown, it was a partial shutdown and it lasted 35 days. Now, there was some funding in place, and I put a link to an article again in the post that comes with this video as well. So using a partial shutdown and the previous one, and that lasted 35 days, using that as a barometer, and obviously there's a lot of other political issues and a plethora of challenges in the USA at the moment. I don't personally imagine that this is going to get dealt with anytime soon. So that's why that Polymarket market of the week is there. And yeah, go and check it out for yourself. I think it's slightly mispriced personally. I'd recommend you have a look at that. Of course, the thing with the government shutdown, and we've seen this in the gold price today as well. And we have to remember that with gold itself, we went through the fundamentals last week. We know there's currency printing. We know there's devaluation of currency. We know central banks have been buying. Those things are not going to change. The underlying fundamentals are there. What we have to remember with gold is that there is still geopolitical risk with it. And that could work in gold's favor. And just looking at the charts this week, as I said, we're on Wednesday, the 1st of October. Gold's already up $100 on the week itself, up just under 3%. Some of that has come after the US government shut down as well. So there are still geopolitical factors at play. I always say that if you're trying to trade this market, be careful. If you're looking to buy and hold physical gold, again, not a financial recommendation, but even at $3,865, which is where it is at the moment, I think that's still a bargain, to be honest. $5,000 gold, very likely. I do think $4,000 will get touched by the end of the year. Whether that finishes the end of the year at $4,000 is a different question, but certainly $4,000 in the next couple of months, possibly by the end of October, is probable in my opinion. But long-term, 5-figure gold, I think, will happen. So even at this price, it's still relatively undervalued as far as I'm concerned. But the point being that although all the fundamentals are there, we still have to remind ourselves that there are geopolitical issues and that can have an impact on the price of gold. I should point out that the market I've just looked at is CFDs on gold, so gold futures, 3,865 at the time of recording. If we go over to silver and we have a look at silver, again, I'm on the weekly chart here. It's up just under 3%. It's around $47.40 at the moment. Again, there's a lot of buoyancy there. A lot of people saying it's going to go to 50. I'm in that camp. That wouldn't surprise me if that happened by the end of October as well. Bear in mind, towards the end of the month, we do have a Federal Reserve meeting. Chances are they're going to cut by 25 basis points as well. And of course, as we just mentioned, there is a government shutdown at the time of recording. I think that's going to go on for a while. I'm not sure what you think. Please do put your comments below. It'd be interesting to know what other people think. But the less there is government, that might be better for a lot of people. But point being, for money risk, in this case, gold and silver risk, again, don't be surprised if we see a squeeze up in prices as a result of a government shutdown. Now, of course, I'm not from the USA. I'm not a US citizen, so I'm not going to chime in and tell the USA how they should run their country. What I would say, though, is if there is this threat of government layoffs, um, I think that can only be beneficial. I wish they do the same thing in the UK, to be honest. And the reason I say that's beneficial is because when government gets too big and too powerful, we need to you need to trim the fat, so to speak. And there's a lot of bureaucratic processes, a lot of red tape, especially in Western civilizations. So having the government shut down isn't the end of the world necessarily. Yes, I appreciate some services and areas might be, underfunded or won't get funded full stop. But normally, what you find when the government is involved in too many things, it creates inefficiency. So actually take them out of the equation, you might find that things run a lot smoother. I have no idea. We will find out how long this thing lasts. I know that in the UK, there was a similar thing years ago with one of the rail franchises. There were issues with it. The government took it over, nationalised it, I think, one of the main lines between Scotland and England. And actually, they've done quite well running it. Now, I'm not saying that we should nationalise everything, but there are times and there are examples when actually things like that can work in terms of nationalisation. We will see what happens. But at the moment, at the time of recording, I say gold and silver both up just under 3% on the week. And as mentioned, we have no idea how long this is going to last, i.e., this shutdown. A quick look over at platinum. Platinum on the week down ever so slightly, down by $19. It's down 1%, 1.2%, sorry, on the week. Again, I'll link to the article and video I done last week looking at the fundamentals of platinum. Ultimately, 70% comes from South Africa, 10% comes from Russia. They are jurisdictions with problems, put it that way. So 80% of the world's platinum supply comes from jurisdictions that have issues. And all that takes is for demand to outpace supply, and voila, there you are, higher prices. Of course, there are other many reasons in terms of catalytic converters, energy, and so forth that are playing into platinum's hands. But so far for the month of October, and again, we're on the first, it's ever so slightly down. For last week, it was up 12.6%. I'd also highly recommend you check out the end of month macro with Chris Steadley of Live Squawk Commodity Corner. So at the end of the month, we do a end of month macro. We look at the monthly charts as well. I'd also recommend for the first time at the end of this year, I will be doing an annual review of the chart. So there will be an annual commodity wrap and an annual equities wrap as well. Of course, they'll come out at the end of December / the start of January. Sticking on the markets, we will have a quick look at the S&P and so forth. So the S&P 500 is sitting at 6,720, Nasdaq at 24,815, Dow Jones at 46,500. I think it's going to be onwards and upwards for these markets for the next 12 to 18 months. I'm not saying it's going to go up in a straight line. There could be challenges along the way. And the reason for that is that, as per Luke Groman, the dollar, the DXY, is in a secular, at the start of a secular bear market. So it's going to go down and it's going to have a prolonged downward trend. Now, if things are like that, are putting pressure on the dollar, and bear in mind the dollar index is made up primarily of the euro. The euro, I think, recently hit a relative high against the dollar, if I'm not mistaken. So the chances are that the euro itself might go in a south direction. Well, that just means that puts more pressure on the Dixie itself. Now, if that puts more pressure on the Dixie, we see that reflected as well in precious metals prices, but also markets priced in US dollars, i.e. the S&P 500, the Dow Jones, and the Nasdaq. So therefore, I'm not going to rule out that this is actually going to, or these markets are going to continue to go onwards and upwards for the next 12 to 18 months. If we look at the VIX index, so that measures the volatility of the S&P 500, and I always put this in the market wrap on a Sunday as well, that's been hovering around 15 for the last 3 or 4 weeks. 15 is normal volatility, i.e., nothing out of the ordinary is happening. If we look at the high yield junk bonds as well, and again, I put that in the market wrap every Sunday too, they are showing a case of onwards and upwards. Yeah, admittedly, there was a very slight drop off last week, but nothing to be concerned about. So these indicators here as well are showing that these markets, again, these US indices, can go from strength to strength. Now, would I take a position here and go long? Probably I wouldn't. I'm quite happy to wait on the sidelines and short it at some point. You could go long if you wanted to, but if you're going to do that, put your stop losses in just in case something happens. I also wouldn't rule out as a shooting to the upside of the Dixie, just because that would catch a lot of people off guard. Of course, if that goes up, that would then put pressure on the US indices. Ultimately, I have no idea what's going to happen, but just taking a contrarian point of view when everyone is saying, oh, oh, this is dangerous, oh, it's October. If you look at the month of October historically, actually, that's not been that bad a month. September's normally the dangerous month for equities. October is a bit friendlier. But looking at where everything's going, and again, just going in layman's terms, that the dollar index is in a secular bear market, then the US indices, are likely to go onwards and upwards. So watch that space. Let's see what happens. Going back to other things from around the world, I should say that a uranium investor and myself just this morning released a Q&A session about digital IDs. That's quite a hot potato of a subject in the UK at the moment. We saw that the Swiss narrowly voted through digital ID. I think it was 50.4% were in favour of digital ID. And as mentioned a week or two ago, the Vietnamese government, not the most friendliest governments in the world, to be fair, but they banned 86 million Vietnamese bank accounts because people related to those bank accounts would not take a digital ID. Anyway, Uranium Investor asked me the questions. I provided the answers. They're a mixture of written answers and audios. I'll put a link to that in the post that comes with this as well. For those that want a Plan B update, I said that I would give you a Plan B, Plan C update. So currently dealing with Mexican immigration about getting permanent residency. So there's really no major update on that. I've got to go back and have a chat with them hopefully in the next week or two to get that finalized. And in terms of my Plan C, Paraguay, again, all things ticking along nicely, dealing with various authorities to get things apostilled and then hopefully head off at some point in October. I'll keep you up to date on how all of that goes. What I should say and what I will say is that I'm delighted to welcome Adam Fired as a sponsor for these weekly macro videos. Adam is a published author, regular media commentator, has over 800 million social media views on Quora and beyond. He helps people look for a plan B when it comes to diversifying portfolios and when it comes to investments. So whether you've got $500 or $500,000, I recommend you get in touch with him. Please do that using his email, which is hello@adamfired.com. That's hello@adamfired.com. His WhatsApp number will be in the post that comes with this video, or you can visit his website, which is adamfired.com. Do get in touch with him, have a consultation with him by all means. Do mention that you've come from the Contrarian Capitalist as well. And again, I'd like to thank Adam for sponsoring this video and also the subsequent post that comes with this video as well. Finally, I'll wrap up by saying that there's I say there's not a lot going on in the UK. There's always a lot going on in the UK, but nothing of too much concern at the moment. Again, the main thing is digital IDs, and again, I highly recommend you go and listen and read the post that I've done with Uranium Investor as well. It would be an honor to be able to serve yourselves at a higher level. If you are yet to even be a free subscriber to the Contrarian Capitalist, then you can become a subscriber, and there's going to be a button below as well. We'll just go to contrariancapitalist.substack.com, become a free subscriber. And of course, if you're already a free subscriber, please do allow me the honor to serve you at a higher level. Do become a paid subscriber. And for that, which works out at around $9.20 a month on the annual program, or $11 a month if you pay for it monthly. And for that, you are going to get early access to all the expert interview podcasts. So you get that information before anyone else does. You also have access to the commodity wrap, which comes out every Friday, looks at the commodity markets. You also have access to the market wrap, or the indices, the equities wrap, that comes out every Sunday as well. And you also have access to the mid-month macro and the end-of-month macro that are done with Chris Steadley as well. And you'll also have access to any portfolio changes, any portfolio updates, access to the full archive, and also access to things such as the end-of-year commodity wrap and the end-of-year market wrap as well. Again, for the price of a couple of cups of coffee a month, please do allow me the opportunity to serve you at a higher level. And of course, if you want to become a founding member, then you are welcome to do that as well. That is a one-off lifetime investment. I plan on running this channel for a very long time. So for a one-off lifetime investment, I would imagine it's going to be worth it without a shadow of a doubt. As always, go to contrariancapitalist.substack.com, press that subscribe button. If you are watching this on Substack, then in this post, you will see a big orange button below that says upgrade to paid. Again, please do allow me to serve you at a much higher level and protect your wealth, defend your freedom, and outsmart the system. Have a great week. We'll be back with a podcast with Steve Penny on Thursday, the 2nd of October. The commodity wrap will be with you on Friday, the 3rd. Have a fantastic week. Take care. Speak soon.